what's up? It's me, Haley Jones with eXp Realty. I am here with
Shay Martin with Mortgage Investors Group.
and you're seeing our faces, which means it's time for a Finance Friday conversation. And this week we're talking about student loans and how they impact your purchase of a home and your home lending needs. And I just want to say, similar to debt to income ratio, which we talked about last time, student loans make me cringe because I have a lot of student loans. So that's, we're not talking about that just because it makes me cringe, but a lot of people have student loans. And actually, according to the National Association of Realtors, 24% of all home buyers report some sort of student loan debt. So if you're between 22 to 29, about 46% of home buyers have outstanding student loan debt. And then if you're in that 30 to 39 range, about 38% of those people have student loans. And I just want to say those age ranges because the median age of a home buyer right now is 33. So over 30% of those people are dealing with student loan debt. And this is a huge issue when it comes to your debt to income ratio. So tell us kind of your thoughts about student loan debt and how you see this impacting the home buyers you're working with, Shay.
Right. So student loans, like you said, very prevalent. Several, a large percentage of home buyers have student loan debt. So, and it's a big topic right now because of everything that we're going through with COVID and the CARES Act and things like that. And, I know there's talk about student loans might be forgiven and all of that. So I just wanted to kind of mention student loans because we do, regardless of if you're making a payment or not, we do have to factor in your student loans to your debt to income ratio, to your qualifying, because the idea with student loans, now, if they're forgiven, let's not talk hypothetically, but the idea with student loans, even if they're in deferment right now, you're going to have to start making a payment on those eventually. And so the idea is once that payment comes into play, are you then going to have a trouble making your house payment? So that is why we as a lender, regardless of if you're making a payment on your student loans or not, are going to have to factor those student loans into your ability to repay on the mortgage, into qualifying.
So let me just repeat what you said. So even though right now your loans may be in deferment, if you're looking to purchase a home, that amount that you're going to be paying is going to be calculated in to your debt to income ratio and considered into what you can be approved for or not when you buy a house.
Exactly.
Cool.
And this kind of leads us into the next thing is every loan program. And I know I feel like I've broken record. I say this every week. Every loan program is different, which is true. With student loans, every loan program is different. So every loan program looks at student loans differently. Typically deferment wasn't as big of a thing because it used to just be once you got out of school for a year or two, they were deferred. And then you would set up a payment plan and things like that. Well, now because of COVID, pretty much majority of people, even if you're making a payment, it's not required. So most student loans are in deferment right now if they are federal student loans. So the deferment is big because if you're not making a documented payment or an actual payment on your student loans, then we as the lender are going to be required to count a certain percentage of the outstanding balance in that debt to income ratio because we don't have a documented payment. And so we're going to have to estimate a payment. And that's where every loan program is different as far as what that percentage is. Majority of the student loans now, or majority of the loan programs, will allow us to count with 0.5% of your outstanding balance as your monthly payment. So it used to be 1%. One of the loan programs still is 1%. So it's gotten a little bit more conservative, a little bit more lenient, which has helped a lot of people out. I have someone closing on a house this week that could not qualify on an FHA loan. FHA changed their guidelines. Now they can qualify. Now they're closing. So it's been a great change. They are, updating guidelines constantly regarding student loans. But again, we have to count. If you're not making a payment, if you don't have an actual payment, on your credit report, in your student loan documentation that we can know what you're paying, we have to count a certain percentage, which usually is higher, worse, kind of a worst case percentage in your qualifying ratio.
So it sounds like then it doesn't matter, or maybe I'm misunderstanding, but like, for example, in my situation, depending on which program I choose, my student loan repayment, my payment could be $100 a month, or my payment could be like $1,500 a month.
Yeah.
based on which program. So I'm guessing, and that has to be renewed every 12 months, right? So whichever program, that has to be, redone. So I'm just
Right.
curious in terms of, so it sounds like though you guys just do a blanket 0.5% of the total amount,
That's a
period,
great
regardless
question.
of the thing.
Yeah, so that's a great question. And that's one of the ways that student loans have updated and helped a lot of people out. So it used to be in the past, it was the greater of your documented payment or
Okay.
the ratio or the percentage, excuse me. So even if most student loans, even if you're making a payment, are on an income-based repayment plan. So it used to be that we couldn't use that income-based repayment because if you were paying $1, some income-based repayment plans are $1 a month. If you were paying $1, we couldn't use that. Now, majority of the student loans will allow us to use the actual documented payment, regardless of whatever payment plan you are in, or the percentage if you are not actually making a payment. So if $1 pulls in on the credit report, we can use that $1 if that is your actual documented payment. Again, every loan program is a little bit different. So, depending on your loan and things like that, we want to have those conversations, and we might not be able to use that actual payment. But for the most part, majority of the loans now will allow us to use the actual documented payment. So if you are paying at least $1, we can use that as your actual payment. So, but again, that's where it's a little bit hard right now because of the CARES Act. A lot of people are in deferment and no payments pulling in on their credit report. So I hate to say that, it's a little bit better if you were actually making a payment versus not making a payment. Obviously, most people would prefer to not be making a payment monthly. But for qualifying purposes, it could help you out if you're actually making a payment, because then we can use that payment versus that greater percentage.
Cool. So, and this may be more of like a credit report question. I know we talked about debt to income ratio, and I had asked you about like, is any credit worse or any debt worse than another? And so, like when I was going through my master's degree, we were told by like the financial advisors that this student loan debt is good debt, and it's great that you have this debt, which is all lies. But I guess I'm just curious, on the home lending side, when you see somebody that has a ton of student loan debt, does that, I mean, obviously their income matters, right? But is there a negative connotation with that? Is it actually good debt in like a home lender's eyes? Like, what is that?
So again, not really factored in as good versus bad. Probably what they're kind of referring to is, I do know people who open student loans in college, and that helps them to start building credit. So that actually helps you to credit score if you don't have any other credit. So that's where student loan debt could be a good thing, is that it helps you to start building a credit history, building a credit score. But then again, if you're not making a payment, so if you're in deferment in those first couple years, we can't necessarily use that to show you have the ability, to validate your credit score if you're not actually making a payment on those student loans. But student loan is not bad debt. The one thing I will say, if for some reason you miss payments and things like that, or if you get behind, that could hurt you in qualifying, in the sense that those are federal loans. So if you are behind on payments to the federal government for a federal student loan, that could impact you in getting a government mortgage loan. So that's the only way that student loans can really hurt you necessarily as far as bad debt, is if you're not making payments on them. That could put a flag on you with being able to borrow money from the government again.
Which this is interesting in light of, I feel like, VA loans and the government paying for like college degrees. And sometimes I've heard that, and this could be wrong, but like basically what I've heard is, you may be like, Haley, this is not even true, but what I've heard is that like if you're a veteran and you get your college paid for, that sometimes the government is not so great about paying those bills, and so those credit scores are low, and so there's like more leniency on a VA loan regarding like your debt, your student loan debt, which is actually like the government's to pay back. So I'm just saying it's interesting then that like on the federal side, if you have federal student loans, not involved as a veteran, obviously, but then that it could ding you on the federal getting a home loan side. Does that make sense what I'm saying?
It does. Yeah. I mean, and then there's just, if someone else is responsible to pay those, it's just kind of with anything. If you have a collection account that's not a true collection, if you have documentation, that can help your credit score is kind of what your credit score is, but that documentation would help you to get your credit score fixed or corrected or things like that. So if there are inaccuracies, if somebody else is responsible for paying any debt, student loan, anything else like that, you definitely want to work with the credit bureaus to get that updated and corrected.
Got it. Okay.
So,
cool.
I'm
trying to think.
Yeah, I see a lot of student loan payments where people get late payments because it should have been in deferment or it gets transferred and somebody never knew it was transferred. So student loans can be a doozy in that sense, that a lot of times they get moved around on people and things like that. So that's where student loans can hurt, is because people aren't necessarily making a payment, but that doesn't mean that there isn't a creditor out there that expects something from you. So just as much as you can, stay on top of your student loans so it doesn't come to hurt you later on.
Right. And I think the big takeaway for today is, like, even if they're in deferment, like, those are still factored into your pre-approval process and what home, you can buy in terms of
exactly. Yeah. And there's different, like you mentioned, like with veterans and it getting paid for, there are different programs. Like if you teach within this district for a certain amount of time, your student loans are paid for and different things like that. So some loan programs will allow us to use that documentation as well to show that you will never have to make that payment. It's just hard because anybody could quit their job and change, and then you would not get those paid off. So that's a little bit of a gray area that's hard for us to use, but sometimes they will let us use that documentation. But let's just say, as a general rule of thumb, even if they're in deferment, we have to factor those in, and just kind of, even if you're not making a payment, don't plan to make a payment because eventually maybe they get paid off by the government. Just stay on top of your student loans, be aware of them, know your balances, things like that. It'll be a lot easier at the time that you make loan application to have that information.
Yeah, this is making me
I know, I feel like your whole mood has like
I mean, because when I think about student loans, I just feel like, I mean, but that's has nothing to do with Finance Friday. That's a personal problem.
Yeah. So like you said, majority of a lot of people graduating right now have student loans. I mean, this is a whole bigger topic for, how it impacts, just everything, more so than qualifying. As far as qualifying, just know we will have to factor them in. But yeah, we could talk about all the effects of student loans and what they have on people, because a lot of us are not going to graduate college making enough money to pay off student loans right away.
Well, and I think too, it's just, there's a lot of misinformation, and then also there's ever changing information, and there's all these different ways to pay back. And then there's all this, like, I don't know, student loans to me are like, ugh, but I need an attitude adjustment about student loans.
Yeah, the big thing is, if you have student loan balances, regardless of if you're paying or not, just let your lender make your lender aware of those. Obviously, we'll see them on your credit report, but just have that conversation up front, and we'll let you know what we have to factor that in and how we have to look at that for qualifying purposes.
And just based on those numbers of percentages of people that are homeowners and have student loan debt, it is possible to own a home, and be successful at that. So even if you feel like, I know about student debt, it's okay. Like, you can still be successful in your real estate goals.
And like I said, they've recently, updated those guidelines and helped people out a lot on that. So if previously you couldn't qualify because of student loans, try again, because there's a good chance that guideline's been updated and maybe you could now. So that, I should have probably said that from the very start, is if you've ever been denied for student loans, try again, because things have gotten more in favor of the consumer to allow more people to qualify and not let student loans be such a hindrance.
Awesome. I want to sing an Aaliyah song where she's like, "It's the first you don't succeed, dust yourself off and try again." Anyways. All right. Okay. I think that's all for this week's Finance Friday. Again, I'm Haley Jones. I'm a real estate agent based out of Knoxville, Tennessee, brokered by EXP Realty.
And I'm Shay Martin. I'm a mortgage loan originator here with Mortgage Investors Group.
And we will see you next Friday. Have a good one.